Welcome to the Stock Spinoff Investing Podcast, where we talk all things spinoffs. My guests and I may maintain a position in the securities that we discuss today, and this podcast is for informational purposes only and should not be relied upon as investment advice. Hi, everybody, and welcome to the Stock Spinoff Investing Podcast. I'm your host Rich Howe, and I'm excited to have Dom St. George from Cayucos Capital today to talk about some emerging market stocks, and in particular, the recent spinoff from Anglo American, Valterra Platinum. So, Dom, thank you so much for taking some time today. Really appreciate it.
Yeah, my pleasure. Thanks for having me on.
So, I guess you started Substack pretty recently, and I don't even know how I found you, but I think it's just because you write good stuff and it popped up on my Twitter feed or in my inbox. And I was really impressed with your write-up on Valterra Platinum, which is a recent spinoff from Anglo American. So I'd love to eventually get into that. But before we do so, I would love to just hear a little bit about your background.
Sure. Thank you for the compliments on my Substack. So I spent 12 years working for a long only equity manager in the UK, focused on primarily emerging markets, but also international investing. And then with a group of colleagues from that firm, we tried to set up a startup emerging markets business, and we spent the past 3 years working on that. But that didn't work out, and so as you say, now I'm managing my own money under the guise of Cayucos Capital and writing up some of the ideas that I find most interesting around the world.
That's very helpful. That's very cool. And how did you come up with the name Cayucos Capital? It's a unique name. So tell me a little bit about that.
Yeah, so Cayucos is a tiny little town in Central Coast, California, halfway between LA and San Francisco. And I was sitting in a diner there one day on a road trip, and I thought to myself, if I ever do my own thing, hang my own shingle, it'd be a pretty cool name to call it Cayucos Capital. And the underlying thinking is that I'm trying to do something that's investing companies that are off the beaten path and do something quite different to the industry more broadly. And so Cayucos is a long way both physically and philosophically from Wall Street and from the City of London. And so that's the thinking behind the name.
That's great. And that's a great segue into your approach to investing. So obviously you're not investing in the largest, most well-known companies, although Valterra is a decent market cap. But I would love to hear a little bit about what kind of opportunities you look for, how you typically construct your portfolio. Do you like to be concentrated? Do you like to be a little bit more diversified? Are you what's your time horizon in terms of how long you typically hold your investment? So would love to hear a little bit more about how you approach kind of portfolio construction.
Yeah, so I learned a few things from my first role looking at emerging markets. The first was getting comfortable looking at lots of different things. There's a couple of analogies on diversification. One is to put all your eggs in one basket and watch that basket. My approach is more to try and just look at lots of different stocks in lots of different places. And so, in my old firm, we owned companies in Zimbabwe, in Costa Rica, in Sri Lanka. And so I kind of learned to get comfortable with investing in a very broad range of companies. And then I guess the second big thing I learned was the importance of people, and connected to that, the fact that valuation alone isn't necessarily that important. So there's a lot of companies in emerging markets that are cheap, but for example, a company ultimately owned by the Chinese government or run by a Chinese appointed bureaucrat. I mean, is the cheapness of the stock is ultimately not that important, in my opinion. And so that was and is a filter to very quickly, dismiss a lot of companies around the world, and allow me to look at a lot of different stocks and quite quickly deduce what's interesting. And so in terms of what I look for in my investment process, ultimately I'm trying to find cheap quality cash flows. I live off income, and so there are a number of ways to try and find that those cheap cash flows. One is because that company is out of favor for whatever reason, and that includes commodity companies, for example, where the underlying commodity price is low. Another is because the market underappreciates the quality of the business and the sustainability of the compounding and the cash flow generation of the business. And then I kind of have a third bucket that I call special situations. So for whatever reason, the business isn't generating cash flows today, but through deleveraging or a change in the business or an improvement in the business, in the long run, I can see opportunities for lots of cash generation. And so, for example, I own a couple of busted SPACs that are valued like they're going out of business, but in reality, I think there's an underlying strong business there that can generate lots of cash flows, and the valuation I'm paying today allows me to own those cash flows very cheaply.
Got it. That's very helpful. And then in terms of spin-offs, so obviously Valterra is a spin-off or a demerger, as it's usually called overseas. Do you actively follow most emerging markets or international spin-offs, or is it just if one pops on your radar and you dig in and you think it looks interesting, you take a look?
Yeah, there's one means that I use to try to find those cheap cash flows, and your work is one of the ways that I follow that. I do have a couple of spin-offs in my portfolio. I'm not monitoring every single one, but I do try and take a look when a spin-off happens. So, for example, I own Grail, which was a spin out from Illumina, and that was a very successful investment for me. And I also own Finia, which was a spin out as well. So I it's definitely an interesting hunting ground to look at.
That's great. Yeah, Grail's been a great one. Yeah, I think generally the setup's good when there's like a regulatory reason why an asset has to get spun out, and that was the case with Grail and Illumina. And I guess one more question before we get into Valterra. What are your thoughts on emerging markets versus the US and the long-term cycle? Because I know there was a period when emerging market stocks were the end all and the be all, and the performance was incredible, right? It feels like so long ago that that was the case. And not that that's a way to invest, but I tend to think that at some point the cycle will change and emerging markets and international markets will have their moment in the sun, and maybe it seems like it's starting to happen. So I'm curious to get your thoughts there. I have similar thoughts on small caps. Small caps have historically over the past 10 years, really underperformed the large and the mega caps. And I got to think that at some point that will change. But I'm curious, how you think about emerging markets versus developed markets and those long-term cycles of outperformance.
Yeah, I agree with you. I do think these things work in very long-term cycles. So I joined the industry and joined an emerging markets team in 2010. So that was the peak or very close to the peak of excitement around emerging markets. And I remember it's interesting because my team was a group of very contrarian investors, and so we were going the opposite direction. And so the largest holding in our emerging markets fund was Unilever PLC in London. And at that time, all of those companies like Unilever, Colgate, Coca-Cola, Pepsi, they had a very prominent chart in their presentations showing emerging market exposure. as a proportion of overall sales, and talking up that they were really emerging markets businesses. And it's kind of funny because we're almost at the complete opposite end of the spectrum today. In terms of when and how that changes, these things are very difficult to predict. And so when I underwrite companies, I try not to think too much about a re-rating of the stock, and just I look at it in the sense that you're getting the opportunity to buy cash flows on a very cheap basis because of the fact that the cash flows come from Brazil or are mainly generated in South Africa, for example. If emerging markets become the flavor of the month again, or the flavor of the decade, that would be amazing news for my investments. They would re-rate, but I'm not expecting that to happen. I view it more as a lens through which to find opportunity.
Yeah, I approach it the same way. It's like the idea has to make sense from a bottom-up perspective. And then hopefully if you get a little tailwind because the cycle kind of changes or investor preferences change, then that's just like the cherry on top. So that makes a ton of sense. And let's pivot to Valterra. So I got your investment case landed in my inbox, and I cover spinoffs. I cover US spinoffs a lot closer than I cover international spinoffs. So I wasn't as close to Valterra about the Valterra spinoff, and it was a little confusing because I knew that company as Amplatz or Anglo American Platinum, but they changed their name to Valterra. So I'd love to hear a little bit just about the background of this transaction. What happened? I guess the spinoff from Anglo American, and then why you think it's an interesting opportunity at a high level, and then maybe I can jump in with some questions.
Yeah. So the story kind of begins in 2024 when BHP, the giant Anglo-Australian miner, tried to acquire Anglo American PLC, which is London-listed FTSE 100 company, and Anglo American, resisted being acquired. And one of the things they did to try and appease shareholders and convince them that their plan was, as an independent company, was better than BHP's takeover offer, was to agree to spin off a number of assets, including De Beers, which is the diamond mining monopoly almost, some nickel assets, and also this business, which is their platinum mining assets. And I wasn't particularly complimentary of Anglo American in my note. They have a particularly poor track record of corporate transactions, and we were talking offline about Thungela, which was the thermal coal assets they spun off in 2021, and I think that was a 12-time return for investors who bought that spin-off within kind of 18 months. And so it tends to be quite an interesting flag, let's say, when Anglo American decides to spin off an asset.
It's really interesting because I was just looking, yeah, so Thungela Resources, Anglo American spun Thungela off, and almost immediately coal prices just started to go absolute nuts, like just going up every day. And it seems like platinum prices are doing the same thing. Do you have a sense? I know you talk about in your note that there just hasn't been that much investment in new supply of platinum. And so I guess, do you have a sense of what's driving the strength in platinum? Is it just demand is kind of holding steady or slightly growing, and there's just not enough new supply to really offset the demand, or what's really going on there?
Yeah, I'll certainly get to that. I guess I want to add one more point on Anglo American, because I was trying to think about why mining companies in general have a very poor track record of timing their own cycles. I mean, in theory, they're insiders. They should know, they should have a very keen sense of, are we close to the top of the cycle? Are we at the bottom? But it seems they do the opposite and spin off attractive assets at the bottom, try and do massive acquisitions at the top. And I guess it's a good opportunity for me to sort of re-emphasize the alignment part of my investment philosophy, which is when you have owners of businesses, they really care about per share returns and using capital very wisely. Whereas where you have ultimately agents, professional CEOs, who may or may not be in the job for more than 3 years, I think that leads you towards impaired decision making, shall we say? And Anglo American, they've made some kind of all time poor choices. So I hope
that's very helpful. Yep, and I totally agree.
So in terms of platinum, I mean, the thing that's quite unique about platinum is that almost all of the world's resources are in South Africa. So I think it's 2/3 of the world's platinum group metals, which is mostly platinum and palladium, and a few much smaller metals like ruthenium and rhodium, etc. And uniquely, South Africa has been an environment that that miners don't want to invest in. So even when the platinum and the palladium price goes up, these companies are very loath to actually invest in opening mines. And there's a few reasons for that. The first is that the general political environment has been quite hostile to investing to the mining industry. The South African mining industry has a very complex history, dating back to apartheid, had real safety issues of poor paying conditions, and so that's changed over time. But the workers are highly unionized in South Africa, so that's one challenge. The second big challenge is that some mainstream politicians, not from within the ANC, which is Mandela's former party, the party that's dominated politics since the end of apartheid, but mainstream politicians from outside the ANC, they've talked openly about nationalization of assets and expropriation. So that doesn't encourage people to put investment dollars into the country. And then the third big issue is power. Eskom, which is the national power utility, state-owned power utility, has had huge problems of corruption and has been very incompetently run. And so, powering your industrial or your mining assets has been a real problem, and you've had big issues of blackouts or brownouts. And what that means practically is you have to, run very expensive diesel generators. And so you actually had the issue a few years ago where the CEO of Eskom, the power utility, tried to call out corruption going right up to the highest. But effectively, cabinet ministers were stealing electricity and coordinating the theft of electricity from the grid. And he actually received death threats, and somebody tried to poison him as a result of him trying to call out this corruption. So it's not exactly been a very fruitful environment to invest in South Africa. Some of that is changing. Eskom's management has massively improved. The ANC lost its absolute majority, and so it's in some ways more accountable. But that's a very long-winded answer to why platinum production has been falling, because there are really there are very few alternatives if you want to get these metals out of the ground. You have to do it in South Africa, and companies are reluctant to do it.
That's really helpful background. And I remember when I was invested in Thungela, part of the thing that you had to monitor is, oh, electricity's out, like they're not going to be able to produce, as much or ship as much coal. And so that's a really good reminder. And then in terms of the use for platinum. So you covered really nicely in your piece, and I really didn't know this, but as I understand it, as you describe in your write-up, the primary use of platinum and related materials are for catalytic converters, for internal combustion engines, and for hybrid cars. So is that the right case? Is that the primary use for platinum?
Yes. So it's about just under half of platinum use specifically, but if you take platinum group metals as a whole, it's well over half. I'm blanking on the exact proportion, but I think it's about two-thirds of uses are for catalytic converters.
Got it. And then the other thing I think that you cover very nice in your report is how I think one of the bear arguments maybe for consumption of platinum is that electric vehicles are going to take over the world and demand for internal combustion engines is going to go down. So I guess how do you get comfortable that, investing in a company that produces platinum and platinum group metals, how do you get comfortable in like the long-term demand outlook, given, the rise of electric vehicles?
Yeah, so I think my unique take is that I think that the long-term solution, I mean, the long-term solution is all of the above, but I think that hybrids are the the best solution, let's say. So I think often when policymakers and environmentalists think about climate change, they fall into the trap of looking at things purely through the lens of carbon emissions. And that's one challenge, one constraint. But the reality is there are lots of constraints within which we work, and one of those big constraints is the availability of battery metals. So lithium, uh, cobalt, for example, and a number of others. And we saw, I think, between 2019 and 2022, electric vehicles went from 2% to 10% of total car sales, and that caused an enormous strain on the supply chain for battery metals. So the lithium price went up sixfold, and the cobalt price went up twofold. And I think if we were, and bearing in mind that electric vehicles are competing with, batteries to back up the electricity grid, particularly as we put more solar and wind, into the generation mix. We need batteries for electricity storage as well. So I think it will be very difficult to get to a world where the fleet is 50% electric vehicles without pushing up battery metal prices to prohibitive levels. And so I think if you view the key constraint not as carbon dioxide, but as the availability of battery metals, the best way to mitigate carbon and other emissions per pound of battery metals is to use hybrids. And I think one of the key reasons why PGM prices have been going up recently is because of this realization. Consumers, policymakers, and car makers are realizing that there's big demand for these hybrid vehicles. And the one thing I'd add is that without getting beyond my scientific knowledge, the chemical reaction that catalytic converters are catalyzing happens much more efficiently at high temperatures. And so in a hot internal combustion engine, you don't need as much of these platinum group metals as you do in a hybrid where the environment is cooler. So hybrids inherently require more PGMs than an ICE vehicle.
Got it. So as hybrids take share and grow as fast or, faster than electric vehicles, you should see an environment where demand is actually increasing, not decreasing.
Yeah, and that's what's been happening. Hybrids are growing faster than electric vehicles, and they're a bigger portion of the market. And that is somewhat obscured by the fact that when it sort of suits the narrative, hybrids are included as electric vehicles. Um, and so it obscures the fact that hybrids are the bigger segment and the faster growing segment.
Is there a need for these metals for plug-in hybrids, or is it just for internal combustion slash electric hybrids? I guess, yeah. Do you have a sense for, the need for these catalytic converters for those different types of hybrids?
Yeah, I mean, plug-in hybrids and conventional hybrids like a Prius, both of them have an engine and combust gasoline, so they both require a catalytic converter, and those emission standards are increasing over time in most countries, and so the requirement for metal is also going up.
Got it. Okay, and one of my questions was, I just pulled up the price of platinum, and it looks like it's basically at a higher than its peak in 2021. So I guess my question is that right? Am I looking at the right platinum price? And then number two, what's driving that? And I think you might have already answered it. It's really the realization that the demand for hybrids is going up. There's going to be increased need for platinum group metals, and that's really, driving the price higher.
I think prices are about $1,400 today. I think they got as high as 2,000 off the top of my head in 2021. But
Hmm.
also the other thing that happened in 2021 was that the palladium price went parabolic, whereas the platinum price was more subdued. So we're certainly nowhere near the kind of peak levels that we got to in palladium in 2021.
I see. Got it. Okay. Okay. Great. And then what about the competition? So as I understand it, there's basically three main competitors that control the vast majority of platinum and platinum related metals. They're all based in South Africa. So maybe spend a few minutes just describing the competitive landscape.
Yeah, so yeah, I've expressed a view that I think PGM prices are probably going to go up. So, one school of thought is that you should buy the most levered, high cost miner that you can to get, the maximum torque to that rising price environment. My investment approach is slightly different to that. I prefer to sleep at night, so I try to find the highest quality within a group, and so that, in my opinion, is Valterra, because it basically has the best quality assets. It has a giant open pit mine, whereas most of the other mines are miles under the ground, and so that implies lower cost, much better safety environment. And so, if prices do go down, Valterra will face challenges, but not to the extent that their competitors do. And the two competitors are Impala Platinum, which has the issue of very deep mines, mostly in South Africa, and big safety issues related to having those very deep mines. And then the third miner is called Sibanye Stillwater. So that company has a background in gold mining, diversified into platinum via various acquisitions in the last 10 years, and then has also diversified into other assets, like other metals like lithium, uranium to some extent. And Sibanye has just it's been quite poorly run. The history of that company is that they kind of bought mines that nobody wanted, um, And so how do you make money from mines that nobody wanted? You have to cut certain corners, and inherently buy lower quality assets and hope to find ways to eke out returns from them. And so it's the assets are lower quality, and it's been quite poorly run over time.
Got it. Got it. That's very helpful. So yeah, so that's interesting. Your approach is, hey, we're going to see higher prices, but let's protect the downside a little bit. Let's invest in the lowest cost provider, best run business, which is Valterra. And so, if we're right and prices go up, we'll make some good money. If we're wrong and prices go down, the downside will be a little bit more manageable. I was just looking at Valterra stock price versus some of the competitors, the two competitors that you mentioned, and Valterra has definitely lagged them both in the past month, past, 3 months, 6 months, maybe even a year. And I guess my question to you is what percentage of that is the overhang from the demerger? Because everybody knew that Anglo was going to spin off this asset. And it's hard to fine tune it, but what percentage of that was because Valtier might have a little bit lower torque to higher prices? I guess, how do you think about that relative underperformance?
Yeah, I don't know. I'm not sure. I think it's a bit of both.
Yep.
Um, because yeah, when you're so I was just looking at the chart yesterday from UBS, which is basically showing that the median PGM miner, or the median ounce mined, has a cash cost, including maintenance capex, of $1,000. So until very recently, the median miner was kind of breaking even at best. I think we only went over $1,000 in at the end of March. So if let's assume that Impala and Sibanye own that marginal mine, they've basically gone from break even to every dollar the price of platinum rises, that goes straight, essentially straight to the bottom line. So there is enormous torque there. So I do think that's a big part of it, but I think also, the market was anticipating this spin out, and knowing that, Anglo American was going to drop 50% of the company onto the market, and so why bid it up in advance of that? And you still have another 20% that Anglo American has locked up, 20% of the ownership of Valterra, which they have to hold for 90 days. So they may well, given the motivation of the spin out is, to simplify, to exit, non-core metals, the likelihood is that they'll sell that 20%, and so there could continue to be a little bit of overhang until that's cleaned up.
And I think the spinoff happened in early June, so you would think in early September, Anglo American could sell that additional 20% stake.
Yeah, that's quite
Okay.
possible.
Okay, that's helpful. And then how do you think of valuation and just kind of like how you frame kind of an upside potential versus downside potential here? How are you thinking about the valuation for Valterra?
Yeah, I mean, frankly, I don't spend a huge amount of time on valuation, particularly with commodity miners, because commodity producers, because it's kind of finger in the air stuff.
Hmm.
So in my note, I used price to book value, which is kind of the best proxy, or an easy proxy for how you could replicate Valterra's assets. And so Valterra trades at 2.3 times book value, or did a week ago when I published the note, and it's in the second quartile of valuation range over the last 20 years. So anything below 2.1 times book would put it in the bottom quartile. So I think, yeah, you want to be roughly right as opposed to precisely wrong. And so I get comfort from the company being, close to the bottom of the range, somewhat close to the bottom of the range valuation wise, and that in so that if the metal prices go up, you're likely to make good money.
That
Um,
makes sense.
I would just add that, yeah, these metals, they do tend to prices do tend to go parabolic from time to time, and if and when that happens, I think from we first got interested in PGM miners in sort of 2015, 2016, over that time period, which was close to the bottom last time around. And these stocks went up kind of 10, 20x over the next, up to the 2021 peak, so 5, 6 years. So I do think there's a lot of upside if things go well.
You said they went up 20x from the bottom,
So I
the
think,
PGM stocks.
yeah, I believe Impala did.
Yep. Wow. That's pretty good. Yeah, you have so second quartile valuation, and then you have kind of near trough earnings power currently. So kind of like trough-ish valuation, trough-ish earnings. That's usually a pretty good setup, especially when it looks like prices are definitely rising. In terms of like capital returns, does this company like it, if prices do go parabolic and free cash flow generation really spikes, does this company, tend to buy back stock or pay special dividends? What do they typically do when they get kind of like a windfall? Or what do you, if there were to be a windfall of cash, what would you expect the company to do?
I would expect them to pay dividends.
Hmm.
I think buybacks are not quite as in vogue in South Africa.
Hmm.
Some companies do it. Um, yeah, I mean, the big risk is that they go and do some big acquisition of
Like
some,
a diversifying acquisition kind of.
yeah, diversifying, as I like to
Yep.
call it. Historically, this company's been protected by the fact that it's owned by a big conglomerate that
Right.
handles the other metals in different subsidiaries. That could happen here. I think it's unlikely. I think you have to meet one or two South African miners to really understand their mindset. They're generally quite miserable. The example I like to think about is so Anglo American, sorry, Anglo Gold, which was originally part of Anglo American but was spun out and fully divested sort of 15 years ago. The background of that miner, it's a South African headquartered miner where most of the assets are, and they, over a period of a few years, sold all of their South African mines and moved the headquarters. And that you don't see that very often. Basically, giving up on your home market. And so it is possible that Valterra could go and do. I mean, the thing is, yeah, they could buy something overseas. It is possible. I mean, I think it's a good problem to have because the PGM prices would have gone through the roof, and you'd have made a lot of money. But I think at that point you would have to be quite careful and thinking about selling your position because
So
that
not
would,
necessarily a risk today, but
yeah,
a risk like if prices do go crazy and cash flow ramps up, then that's something that you'll have to start thinking about.
yeah, exactly.
Okay. And then one other question I had was just on hedging. Is there like an active hedging market? And typically, do these companies do any hedging, or do they, especially with Valterra, maybe their costs are so low that they're comfortable just not spending any money on hedging, and just kind of living with the results of where prices shake out?
Yeah, I don't believe Valterra does any hedging. I don't think. I mean, at certain times, the PGMs are viewed as precious metals, and so the perceived need to hedge is maybe lower. So I don't think the industry are big hedgers in general.
Okay. Okay, that makes sense. And then those are pretty much all my questions. So this has been, really helpful. Is there anything that's kind of key to the investment case that you think we should talk about before we wrap up here?
I don't think so. I think we've covered all the
We
main
covered
points.
it. Okay. Well, Dom, this has been really fun. I really appreciate you kind of giving me a master class on Palladium and PGMs and giving me the lay of the land and sharing your expertise on emerging market stocks. I'm just a tourist on emerging market stocks, so it's really it's helpful to talk to an expert. If people want to hear more or learn, get in touch with you or receive your work, how would you recommend that they get in touch with you?
Probably the best way is via my Substack, which is Cayucos Capital, Cayucos Capital. And I also have an email, which is dsg@cayucoscapital.com. Oh, sorry, it's dsg@cayucoscap.com. Um, and yeah, I'm very responsive, happy to chat about anything. One of the key reasons I set up the Substack was, um, to improve my investment process and also to meet people and if people have interesting questions and perspectives that I haven't thought of, that would be extremely helpful for me to hear.
Sounds great. Well, Dom, thank you so much again for spending some time with me, and I'm sure we'll talk soon.
Great. Thanks a lot, Rich.